Good morning, ladies and gentlemen. Welcome to the Wind Insights Essential Training Series. I am a CFA charter holder and a client achievement specialist at Wind Information. In the last session, we discussed the latest applications of AI in the automotive industry and how to use our Wind Financial Terminal to conduct a top-down systematic analysis of the autonomous driving sector. Today, still, we are not going to talk about the stock performance, but we will for sure share with you utilizing cool kits in Wind Financial Terminal to benchmark the industry leaders' modes. Before we share the research framework, I would like to briefly introduce us Wind as a company. Founded in 1998 and headquartered in Shanghai, Wind Information is a pioneer and a leader in Asia's financial information service industry, serving a diverse range of domestic and foreign institutional clients from 35 countries. So our product and the data matrix surely can boost your research dramatically. Since we might be quite familiar with the autonomous driving industry trend, technology paths, and etc., this time we will continue our journey with Wind Financial Terminal deep into the landscape of leading companies. Of course, we're not just focusing on A-share-listed companies, we're also looking at leading enterprises globally. The functional models we share will also empower you to conduct in-depth research on non-listed companies along the industry chain. All right, before we dive into leveraging the Wind Financial Terminal to research leading companies in the autonomous driving supply chain, let's first identify the most critical segment. After all, the autonomous driving supply chain is incredibly intricate. Without doubt, the most essential segment is the domain controller. The autonomous driving cockpit domain controller is an integrated product that combines in-car infotainment, driver assistance, human-machine interaction, environmental perception, and other functions, making it a core component of modern automotive intelligence. Currently, cockpit domain platforms are rapidly gaining adoption, supporting features such as OTO updates, multi-screen interaction, voice control, personalized settings, and showcasing a clear trend of integration with other vehicle domains, such as powertrain, chassis, and autonomous driving. As autonomous intelligence and connectivity continue to penetrate and evolve, domain controllers are playing a crucial role in shaping the future of intelligent cockpits. Traditional cockpit systems, which rely on multiple standalone subsystems or isolated modules, are unable to meet the increasingly complex demands of modern intelligent cockpits. Domain controllers break through the limitations of distributed hardware architectures, simplifying system hardware and communication framework designs, reducing communication resource requirements between dispersed controllers and lowering overall system costs for the cockpit domain. Acting as a centralized hub, the cockpit domain controller supports the richness of features and high interactivity of automotive cockpits, solidifying its role as the decision-making center for future vehicles. Our focus today is on the domain controller segment in the autonomous driving industry, highlighting two leading companies, DCASV and Visteon. In the 2024 autonomous driving domain controller market, Visteon stands out as the leader with almost 13% market share, and Visteon's prominence is attributed to its commitment to innovation and its strong market influence, making it a formidable player in the global market. Meanwhile, DCSV captures over 6% of the market share, securing its position as a key competitor. And DCSV is renowned for its superior R&D capabilities and adaptability to market change, which underpins success and growth in the industry. Let's switch our focus to the 2024 China Intelligence Driving Domain Controller market. DCSV emerges as the leader with a commanding 25% market share. And this remarkable dominance showcases DCSV's leadership and expertise in intelligent driving technologies within China, second only to Pegatron and Quanta together to Tesla suppliers. We can see that both Visteon and DCSV are pivotal players in the domain controller market, and Visteon's global influence and DCSV's localized dominance in China highlight their strategic strengths and the potential for future growth. As autonomous driving technologies continue to evolve, these companies are well positioned to lead and adapt to new challenges and opportunities. So let's analyze these two companies together with Wayne Financial Terminal. Now let's dive deeper into DCSV, one of the leading players in the domain controller space. And DCSV focuses on key areas including intelligent cockpit, intelligent driving, and connected services. This diversified approach allows them to cater to the evolving demands of the automotive industry, especially the large-scale commercialization of high-level intelligent driving functions represented by Urban NOA, which will drive the company's autonomous driving business to continue to maintain high-speed growth. Focusing on their financial performance for the first half of 2024, which we can switch to the Wayne Financial Terminal for deeper research. Let's just go for DCSV and then press F9. Hope you all are familiar with this description function, which is known as the encyclopedia for any asset class. We can definitely check out the financial key items section. From here, we can tell that DCSV has reported a revenue of $1.6 billion for the first half of 2024, which marks a remarkable 34% year-on-year growth. And this impressive uptick showcases their robust market position and their ability to adapt and expand in a competitive landscape. In terms of the profitability, the net profit for DCSV in the first half of 2024 reached $0.12 billion, reflecting a strong 38% rise compared to last year. And these figures not only underline DCSV's effective business strategies, but also highlight its commitment to innovation and customer satisfaction. When we look specifically at this company's intelligent driving business, of course, we have to switch to segment by the business for intelligent driving. And the growth story continues because when we check out the chart of intelligent driving business for DCSV right over here, we can tell that they have achieved an operating income of $0.37 billion for the first half of 2024, which is a staggering 45% year-on-year increase. And the gross profit margin also stands at around 18.9%, up by 1.9% from the previous year. And for the smart cockpit business, the company reported a $1.1 billion revenue with a gross profit margin of 19.6%, higher than the intelligent driving business, probably thanks to the high market share of DCSV in the Chinese domain controller market. All right, let's switch back to the slides. Following our previous discussion about DCSV's impressive achievements in China's automotive tech landscape, let's cross borders to examine their international counterpart, Visteon Corporation. While DCSV has been revolutionizing smart cockpits in Asia, Visteon has been making waves globally with complementary innovations. Let's explore what makes this transcontinental synergy so exciting. So Visteon's 2024 momentum stems from their strategic bets, such as autonomous driving systems near level 4 capability, cloud-integrated cockpits, military-grade cybersecurity protocols, and cabin monitoring through advanced biometrics. So when we do the same and switch to the Win Financial Terminal for Visteon, there we go. Remember to press F9 and switch to the financial key items. The number speaks volumes. For example, when we check out the total operating revenue for Visteon, we can easily tell that in the first half of 2024, its revenue reached 1.95 billion US dollar, while its net profit attributed to the parent grew 107.1% to 0.12 billion US dollar. And if you break down the revenue segment, this time maybe by items, you can tell that the cockpit, the main controller, recorded a decent growth of 13.94. And what's fascinating, mirroring DCASV's success, these results prove autonomous driving investments are paying off worldwide. So building upon our comparison, I will now focus exclusively on DCASV's innovations without comparing them to other companies, as it definitely outperforms Visteon in terms of size and marginal change. So let's delve into how DCASV is pioneering the future through smart cockpits and autonomous driving technologies, and the implications we can learn from Win Financial Terminal. So let's first dive into DCASV's profitability trends across its core business segments. First, I want to highlight the smart cockpit segment, colored in blue. As you can see from the chart, this segment has been a steady performer. It's maintained stable gross profit margin over the years, which is a great sign of consistency. And this time, let's go back to the description function, and we can check out the segment by items for DCASV. And what we mentioned is the gross profit margin for the smart cockpit business. So when we check out the chart and make it into a line chart, we can tell that this one has a relatively steady gross profit margin, and it has been hovering around 20%, which is kind of competitive in the industry. Next up is the intelligent driving business. We can also visualize it. And this one definitely also show a relatively steady gross profit margin. There are a few slight fluctuations here and there, but overall it's been pretty stable. It seems like DCASV is managing this segment well, keeping it on a steady growth path. And the gross profit margin for this segment has also been around 20%, which is also a healthy figure. Now let's talk about other main business segment. This one has been a bit of roller coaster. So we can tell that it peaked in 2022, which was a high point, but then it declined rapidly to in 2023. And the good news is that it's starting to stabilize in the first half of 2024. And this volatility could be due to a variety of factors, and it's something we will need to keep an eye on it and to see if we can regain its momentum. And overall, we can tell that DCASV is showing some solid performance in the smart cockpit and intelligent driving segments, while the other main business segment is still finding its footing. We will continue to monitor these trends to see how they evolve. Further, we can take a look at the company as a whole. First off, let's talk about profit margin improvement. As you can see from the chart on the left, DCASV's net profit margin has been on an upward trend. It's clear that as periodic expenses have decreased over years, the company has been able to improve its net profit margin. And this is a positive sign, showing that DCASV is becoming more efficient and profitable over time. Now let's dive into expense reduction. The chart on the right breaks down selling, management, and research and development expenses as a percentage of revenue. All these categories have shown a downward trend, which is great news for the company's bottom line. All right, we can switch again to Win Financial Terminal for more details, this time under financial analysis, and we can find earnings quality for more details. So if you scroll down, we can tell that there are so many expenses divided by total operating revenues, and for selling expenses, so it has been decreasing from around 3% in 2020 to about 1% in 2024, the first half. And the administrative expenses or management fees divided by total operating revenue, yes, also shows the similar trends. So for more detailed numbers, we can tell it dropped from about 2.8% in 2020 to around 1.9% in the same period. And the research and development expenses, while it's still at the highest level compared with other fees, it has also decreased from around 10% to about 9%. So this reduction in expenses has directly contributed to better profitability for DCSV. So overall, DCSV has been making significant strides in improving its financial performance. By reducing periodic expenses and managing its selling, management, and R&D costs effectively, the company has been able to boost its net profit margin. You can continue to monitor these trends to see how they impact the company's future growth in the F9 module. Aside from basic financial and market analysis, when dealing with high-tech manufacturing companies, we usually need to pay attention to their competitors to analyze DCSV's competitive strengths and weaknesses. We can use the competitors module in WinGraph, which utilizes deep learning models to integrate enterprise tags, qualification licenses, intellectual property, bidding information, news, and more. So this function allows us to predict competitors and perform pairwise comparative analysis, and helping us as analysts to discover and monitor the dynamics of comparables. So let's meet this function together. So you can just type in WKG in the keyboard wizard and switch to competitors module. So let me give you a quick example. Just typing DCSV for quick analysis. So we can tell that after it's loading that Ningbo Joyson Electronic Corp or NJEC is the most comparable companies to DCSV. So we can tell the basic situation that this company is definitely a global leading supplier of automotive electronics and automotive safety systems. So looking at the shareholder structure, NJEC on the left has a much higher concentration of ownership compared to DCSV on the right part, where about half of the shares are held by relatively stable state-owned enterprises. And in terms of the employee composition or staff structure, DCSV has rapidly expanded in recent years, and the average salary per employee has increased by around 50% over 4 years. For tech companies, it's also important and undoubtedly essential to quantify their technological innovation. So we can switch to technological innovation part. You can tell that DCSV's R&D research accounts for as much as 9%, while NJEC's only at 4.6%. Moreover, DCSV's employees and almost 45% of its employees are R&D personnel. We can also look at the number of authorized patents and active patents to help quantify the company's technological innovation capabilities. And from the supply chain perspective, both companies have well-known automakers and related enterprises as clients. For example, NGEC counts Huawei, Mercedes-Benz, Volkswagen, and General Motors among its customers. And DCSV's clients are also highly intelligent new energy vehicle companies like Zeekr, Li Auto, NIO, and even Xiaomi. It's no wonder that the inventory turnover rates of these two companies are very close. Perhaps the bargaining power of their customers is relatively strong, which is something we need to pay attention to in our analysis. So if you want to further the analysis of a company's supply chain, we can access it through the keyboard shortcut. Again, in the financial terminal, just type in SDB for supply database, or via the supply chain next to the industry chain. Here we can find suppliers and customers from officially disclosed annual reports. Let's take a look together. The supply chain supports switching between supplier perspective and client's perspective for display. After entering DCSV, we can explore its suppliers and customers. Just wait after it's computing. So we can tell that DCSV purchased sensors worth 293 million yuan from CTC Southern Tests. If you're interested in DCSV's supply chain regarding, let's say, reflective materials, you can click on reflective materials to view the highlighted suppliers. And in competitive analysis, you might be curious about how much various new energy vehicle companies have ordered from DCSV. You can switch to the client's perspective. For instance, the hot-selling Li Auto accounts for 23.6% of DCSV's customer base, and it's possible that they may adopt the contract manufacturer model. And besides the publicly disclosed suppliers and customers, we can use the potential suppliers and potential clients to download algorithm-generated potential lists for further in-depth research. All right, as the final part of our analysis of leading company in the autonomous driving sector, examining related party transactions can powerfully reveal the financial health, governance standards, and risk factors of leading companies in the industry, providing vital information for stakeholders. So this is crucial for assessing the company's true value or intrinsic value, ensuring investment security, and promoting fair market competition. For instance, when we dig into DCSV's related party, so we can switch to wind graph, and this time just click on related party transaction. So our main character here is definitely DCSV again. Then we can select the company we are interested in. So for example, companies that have related party transaction with DCSV are all highlighted in red, like Huizhou Innovation Investment. And we can tell the transactions between DCSV and this company fall into the other category with amount exceeding 100 million yuan, accounts for almost, let's say, almost 50% of the 31 related party transaction over the past 5 years. And this means this transaction alone and this related party are worth further in-depth investigation. However, Wind Financial Terminal also helps us connect to the risk control system for preemptive risk monitoring. For instance, although there have been 31 related party transactions involving DCSV in the past 5 years, we can tell that none of them involve high-risk counterparties. Alright, we have explored through competitive landscape analysis, major players in the autonomous driving value chain, financial strengths analysis, industry chain analysis, and a related party analysis. And I am confident that we have seen signals of potential Davis double play in the industry, especially for those leading companies. However, we have not done yet. I do have a little Easter egg for us all, which is our in-house large language model, Alice. We surely spend some effort in doing the research ourselves, but we definitely can designate the whole process to Alice. And this time, we did have a little touch on at chat last session, so this time we can turn to Alice Writer. And we can create our own file and find the company in-depth research under the company report part. Yep, so just select the company you are interested in. For example, our old acquaintance DCSV, and you can put on your detailed requirements, or you can do just what I do here, generate outline. Then Alice will generate the outline for you, just as your financial assistance. So you can also edit the outline and review the outline as you wish. Yeah, so let's quickly review the outline. You can tell that almost every single corner we covered our outline here. If you click on the brain map, you can view it more clear. So we can tell that Alice kind of did all the jobs for us. So the next step for you is just click on full text generation. So no matter how tricky the concepts we have covered, how difficult the financial performance we do and we looked into, Alice will do it for us. Alright, I will leave the joy of exploring Alice to you in the next session and skip it this time. Hopefully you will explore more in the next session. And spoiler alert, next session we will explore the Alice, our latest large language model with its latest functions together in our next session. So please keep tuned. Now we are open for any questions or any thoughts. Just leave your comment below in the chat area. If you do have any question, please feel free to leave it in the chat area. Alright, since there are no more questions, many thanks again for your warm participation. Please stay tuned for our Essential Training series in 2 weeks. Thank you and have a good one.